Hi. So in previous session, we have already discussed about collateral and margin, like how collateral margin works or what is meant by, collateral and margin. So in this session, we'll be discussing about how does it work, actually means how does it work. So I'll disclose that all, insight to you through this 5 to 6 minute video. So let's focus here and let me decode this term. Let's say you are a trader. Right? As a trader, what would be your main goal? As a trader, of course, you will try to buy securities as much as you can in a large quantity to multiply your profit. So, if I talk about trader, see trader or investor, they will have two options to buy the trade. What if you have a, let's say, 4,800 rupees in your account as a balance and you are looking for a Wipro shares to buy it? So current price of Wipro share is 480 rupees for per shares in market. If you utilize this, let's say total cash which you have to buy this particular shares, you will only buy 10 quantities. And if you buy it, let's say that becomes your cash and buy or full payment or delivery, you can say. Delivery, it means we'll pay full amount to the broker or to the, let's say, counterparts to hold that securities. Hold it means you will actually get the ownership right of that securities, right? So if you do this, then that would be your cash and buy. But what if I give you an opportunity to buy 60 quantities in same margin? Now your question would be like, how we can buy it? That's all. Means I'll explain that now. See, let's say we have a facility which is called margin. If you are looking for a, let's say, margin or additional funds, how that works, I'll tell you now. Means how you can utilize this 4,800 to buy 60 quantities in same amount. So now if I talk about, let's say, flow first. Flow, it means why your margin and how margin will help you and who that provide that facility. Let's say you are a trader. You opened your trading account with Zerodha and you have decided to buy securities on margin. Current market price of, let's say, same stock, means Wipro stock is 480 and you are looking for a 40 as a margin because you are ready to pay initial amount which is 80 to the same shares. Alright. In that case, if you raise a request for a margin or funding, then broker will immediately see. Broker will have two options. One, broker can also arrange additional margin. I have already discussed about it. Margin, it means loans. If you are looking for a loans or if you are looking for a credit, then broker can arrange it on their own. That is one way. Alright. Other ways, broker can initiate communication to the immediate bank. Bank, it means broker's immediate bank. Let's say Axis Bank, and ask Axis Bank to provide funding to my client because I'm a broker. I'm talking about on behalf of Zerodha. So broker will ask banks to provide funding to my client against approved list of securities. See, bank already assess or perform some scrutiny or examine some checks and approved list of different securities. Why? Because it will save time. Alright, otherwise if you perform this all physical checks, then it will take a lot of time. But if you want to avoid time, then bank will already evaluate securities and all and then approve the list. So it means if let's say bank has an approved list, that list will be shared with the broker and then you can also access the same list and check the margin. Margin, it means loan, that how much bank can offer loans against securities or on that particular securities. It can be 10%, 20%, 40%, 50%, 80%. That percentage of loan, it will vary. Depends on the security risk. For most of the cases, what we have seen for a large cap securities, broker will offer high funding. Means 60%, 70%, 80%. And if securities, let's say, very risky or less risky or moderate kind of things, then margin percentage would be maybe 70, 30, 40, 50, 20, depends. Everything depends on the security assessment. Now again, a most important question is why bank will offer funding? See, bank will offer funding because of interest payment. Bank can immediately generate overnight interest payment. I'm sure you would have heard about call loan. Call loan, it means this call loan exactly work in this process. If the broker has any requirement, then broker will initiate call loan, then bank will accept the call and provide funding to you. And again, if you see the feature of call loan, why do you offer call loan? Because of interest payment, because of liquidity, because of low risk. Immediately you will get the recovery of your loan. And apart from this, when you talk about risk, here the most important part is when you apply for a margin and if you purchase any securities, eventually you guys means as a trader you will immediately sign RTS. RTS it means right to sell. So in other words, secure of rights. So bank or broker will hold the secure of rights, and additionally broker will take the assurance of collateral. Collateral it means securities. Broker will take the control of collateral under broker trust. And then that confirmation will be sent out to the bank. Look, we have now seized or take the control of securities. Your loan is secure. That's how you know that margin works. But again, how that margin call works and what would be my profit or how I can how I can leverage that out. So let's discuss that. So now if I talk about margin, let's say you have taken entry at this point in time 480. So once you take an entry, of course, if it is a buy, then your expectation would be market will go up or market should go up. All right. If the market goes up, right, then you can buy, means whatever quantities that you have, you would be in profit. So assumption is you had 4,800 rupees divided by 80 margin which you are able to pay initially. So total quantities, let's say you have holded or you have taken position on 60 quantities in your account. See, initially, as I said, through cash part, you are only able to buy 10 quantities, but through margin, now you have multiplied your quantities or purchasing power. So now, additionally, if you see, the most important part is what if market goes up and reach to the, let's say 490, 60 into 10. So it would be around 600. Your gross profit would be around 600. What if market, let's say, which is at same price after maybe 1 week, 2 weeks, eventually, see, margin it means loans. Loans comes with interest payment and additional cost, stamp duty and all other expenses, including broker charges and all. So you will have to pay interest plus charges. And even you can, once you exit the trade, or if you take an exit, then you will have to pay that loan amount as well. But what if something happened and the trade, let's say price goes, or maybe let's say security price goes down in market due to, let's say, global, sentiments and all, or maybe other news, then you will have to bear losses as well. Losses, it means you will have to pay full amount plus loss, whatever that you have received, additionally interest payment and charges. That's how this market, this particular margin, works. And what if, let's say, price reached to the 420, not means full that, let's say, goes down, but market price, which is at, let's say, 420. In that case, you would see one more thing, which is margin call. How we calculate margin call, what are the different types, margin maintenance, all other that details we'll discuss in our next video. But yes, you would see the margin call bank can trigger, or maybe that your immediately broker can trigger and sell out that securities and recover their losses, whatever, recover their amount, not losses, they'll recover their amount first and remaining amount they'll credit it to you. So this is how basically margin works. I'll just give you a hint how a margin we can compute. Margin, it means basically your funded amount plus interest payment plus cost. So that's how we'll reach to at 420. So 420 would be the line where if the market price goes below 420, then ultimately broker will trigger, call and sell the securities. Otherwise, they'll ask you to repay that amount, means fill your account with the full margin. So that's how it works. I hope you got this concept, like how margin works and how that link you can relate with the call loan as well. So yes, I'm done with this short session. If you like this, don't forget to like and share with your friends. And if you're looking for in detail content and all other things, you can get connect with my experts or team. They'll help you to understand the financial products in details. Thank you very much for watching this. We'll see you in next session. Thank you.